first of all, welcome all of you. We're so glad that we're doing this and we're meeting you here in front of us one on one. So, this is really exciting for us. Uh, so, you know, uh, Before we start, I really want to welcome all of you for this roundtable. The title of the roundtable is CFO Driving Innovation for Profitable Growth. I think one of the hat that wears is people management. And there, I think, given the high volatility in attrition rates and implementing work from home policies in your organization, I think CFOs are more concerned and they do take care of empowering employee and employee welfare. So, moving on to our roundtable discussion, CFO driving innovation for profitable growth. Uh, Today, driving innovation and transformation are imperative for profitable growth. So, while given this, I think CFOs are expected to truly embrace the change and disruptions. Uh, while they give in their analytical insights, they bring in their financial acumen, and there are tech tools. So there are tech tools that need to be deployed in the strategic decision making to propel long-term growth. So, while keeping this in mind, our CFO is really looking at technology and innovation at the core. This roundtable, we would explore how total cost of ownership, which is TCO, is creating a holistic view of IT operational costs. How does the TCO help in profitable growth in the context of changing world? So let me introduce all the members today. So I'll start with Mayank Holani, CFO Schneider Electric Infrastructure Limited. Puneet Bayani, CFO Times U. Mandeep Mehta, CFO Policy Bazaar. We have with us Vikas Jain, who's CFO TBO Group. Then we have Karishma Singh, who's Area Director Finance and Revenue Management, North Area, the Indian Hotels Company. Then we have Alka Saxena, who's CFO HCAH, India. Karun Gupta, Head Finance, Salesforce, India. Ashish Kumar, Corporate, VP, Corporate Finance and Treasury, Interglobe Enterprises. Then we have Supriya Sharma, who's Associate Director and Finance Head, Boston Scientific Technologies and Engineering Services. So, let's start with a common question. We'll move around the table and we'll explore this. Let's start with the question that how is a finance leader or a CFO an integral part of enterprise innovation and transformation journey for profitable growth? So, we would like to know your journey. What are you doing in your organization? So maybe we can start with you.
Thank you. So I think transformation, when we talk of business transformation, it's not one part, it's the enterprise wide, whether it's people, process, and the tools, right? And when we talk of CFO, today's CFO is not just a person working from the sidelines who is managing the books and of accounts, right? He is a kind of co-pilot who is working with CEO to drive business. So any transformation that has to be driven, CFO is in the best position to drive it and to influence it, because CFO has overall visibility of, so as and in his role as a CFO, he is involved in all the processes, whether it's supply chain, manufacturing, sales side, strategy, everything. So they are in the best position to drive any transformation and also to strategize which one to prioritize over one over other, because obviously as an organization we have limitation over resources, we can't do everything in one go. So you have to prioritize, and based on your business situation, your industry, your organization demands, you have to see which one to take up first. So that's where CFO plays a key role. Thank you.
Right. Thank you, sir. Mr. Kumar, how are you driving, transformation and innovation in your organization?
Yeah,
for
I
profitable
would
growth?
really happy, that pre-pandemic I knew all these things. So the pandemic really, I'm from the travel and tourism. You all know what the industry went through. So having said that, of course, a lot of things, lot of agility came during this pandemic process, and I think one aspect which we always believe that When you travel, you believe you have to be on time. When we construct hotels, we believe that it has to be in cost and time. But the point is that the most important piece, I would actually refer rather than the finance subject, that it's more to do with the culture and the people who drive the process. One, it can't be one of a process during the whole company's yearly plan. You can't say today let's do innovation. Innovation inventions are two different aspects. I would actually categorize your innovation into three: core, adjacent, and transformational. Core is something when you improve a product or service and experience, like you're traveling, somebody just comes and says hello, taking your name, you just feel important. Somebody just knows your birthday, and some manager just, I was flying Lufthansa on my birthday, she just came and wished me. These are different experiences on an existing core product. Then you come to adjacent, probably trying to go into different market and bring certain stuffs. Transformation is something, again, I go to my own example of Indigo. Every airline was trying to sell, the best piece, giving you the best foods and giving all the luxurious products, and then giving you earphones, music, television. But somehow we figured out a very different mechanism, that what exactly the customer needs. And we made it as short that yes, the customer needs that is to travel from A to B at a point at a time. So everything what you revolve, then the culture, then the philosophy, the mindset, everything was going towards time. That's very important that's for the customer experience. Coming to the cost, like again, most of the aviation across the world, they're bleeding because of the constant geopolitical issues and the crude price going up. So the now comes to the cost. So what we make sure that everything when you fly, it has to be as light as possible. So if you make your aircraft as light as possible, that's why you don't get garam samosas in Indigo while you may get in other flights. So we make sure that everything what you do for an airline to travel, it has to fly in the air, and the cost has to be minimal by making as light as possible. The other thing is that this process of innovation, I think it has to be ongoing exercise, ongoing process, because things are highly evolving. Like we own around 54 hotels across the globe, and when we construct hotels, suddenly we see, I would not like to take names, but hotel aggregators, they come in place, and we believe everything is getting disruptive. But we don't feel so, because the space is totally different. It's an aggregator model, and now we are going brick and mortar model. So we actually acquire land, we develop, it take 5 years to make a hotel, then 3 to 5 years stabilization, and then we say, oh, what happened? What happened? So, but they're in different space, different philosophy. So the point I'm trying to make is that it's an evolving, space, and one has to really look into as a culture. Like when I used to work with Tata's, they used to have a process known as Startup Business Excellence Model, which means that every year you revisit what is the opportunities for improvement. So you just can't, of course, invention is something which is very different, transformational, adjacent on a product, and core on the existing services. So as a CFO, of course, when I was a CFO of the hospitality business, I didn't know anything much about hospitality. But having said that, I think the answer is that, you have to actually make a culture of innovation and process. One is that, and that culture actually has goes from the top. You have to find a core team from your existing team, so that they can take that. It's a relay race. Only the last man can't be get awarded. Everybody plays a very key role from, when you stand the baton. And when I say there's a development team, there's a project team, there's an asset management team, there's a CFO, you have to step into the shoes and make sure that what they exactly look for. And of course, during the pandemic, none of us were new MS Team, WebEx, and Zoom, but suddenly things became so popular. Sometimes necessity is the mother invention. Probably that helps a CFO to take decisions. And last but the least, cash is king. Without paisa, कुछ नहीं होने वाला है. You have to have money. Cash is king. If you don't have liquidity, if businesses are there for years, and if you don't have preserved cash in the business, and same applies for my personal life and so for others, unless you don't have a cash, which is the key ratios, nothing works. You have to have that cash in the business. And if you are making money in the business, please ensure that money is there in the business rather than diverting it. Of course, if it is diverting through proper governance, that's fine. But you have to have, because we see businesses running for years and years, and in pandemic they just got oof. That should not happen. And of course, we also did made money in the airline hospitality, but we started reinventing the financial strategy, rationalizing manpower, utilities costs. Those are very important. So having said that, there is no one prescriptive and diagnostic for all the industry. I think people who know the businesses, I think it's common sense, probably uncommonly available. When you are there in the business, make sure that everything is just dissected. Every metrics is looked at, and probably that becomes a new benchmark. That's all. Thank you.
Thank you so much. I like the part where you say that driving innovation is like a relay race. Uh, your What drives innovation and transformation is culture and people. So that's very interesting, sir. I think it's a great opportunity for all of the peers to exchange notes also at the same time. It's really interesting. So I'll move to Mr. Mehta. So, what are your views here? I mean, how are you driving enterprise innovation and transformation for profitable growth?
Thank you. Clarified. You're talking about enterprise innovation. Otherwise, for finance, the innovation can happen in finance processes as well, the way we manage finance, as well as how we support innovation and enterprise. So I'll focus on the later one. Well, I mean, first and foremost, is the capital allocation issue, as our friend mentioned that prioritizing in terms of what need to be done, how it need to be done, etc. At the same time, what I'm seeing is that generally the data analytics and identification of opportunities. This part is also falling off with CFOs in terms of where to innovate, which area need enhancement. It could be customer related, market related, or it could be operational efficiency related. So those kind of data driven identification, specifically coming out with behaviors depicted by the data, specifically customer, is something where CFOs are taking very active part. Uh, then it's not only identifying ideas, also sometimes you will see CFO leading a cross-functional team to execute the idea. I'm from financial services slash fintech slash insurance tech. So I'll say that in this particular industry, finance take a little different approach to innovation. To give an example, you all must have experienced call on guaranteed income kind of a plan from insurance. So these plans have come off largely in last 4 5 years, and this has been made possible because innovation has been done within finance, within investment team, and we came out with this hedging idea. How can we can hedge the interest income and do the risk modeling on it, convince regulator, convince shareholder, do the business planning, and see that actually this get executed. And trust me, this is approximately 30% of the premium is coming from this line right now. So this kind of innovation happens, but the core thing is that CFO now remains very, very close to customer and market.
All right, we'll take this with Alka. How are you driving transformation and innovation?
Thanks, Vartika. So basically, to my view, as of now, growth is something which everyone is running for. So top line particularly, the salespeople and all the organizations are running for. So for the CFOs, the challenging part is to balance out between investors' aspirations and sales expectation that we would want to run the top line, irrespective of that you are earning margin or not, right? But simultaneously we cannot beat the market price as well, right? We have to be parallel to the market price. So there comes the role of CFOs when we have to prepare our processes and all technology innovations, everything in such a way that you minimize the cost, you optimize the cost, so that you earn the margin irrespective of your pricing being compared to the market. So that's where we are working. So we are working on a continuous improvement program. So of course there are champions amongst the employees as well, so that they own the processes, they own that and they understand the objective of the company. So we have aligned company objective with the employees objective, right? So they enjoy actually working towards that how can we minimize processes, unproductive processes, how can we eliminate or simplify the processes. So there comes the role of IT as well. So there are many processes which IT has taken out or made the simpler for the employees. So that's where I think we are working, and it's going well.
Right. Thank you so much for that. Because of the paucity of time, I'll move on to individual questions. But what we would like to keep it a spontaneous discussion and engaging discussion amongst you guys. So please feel free, even if I'm asking question to Karishma, please feel free if you have a point to come in between and talk about it. So let me start with Vikas. So Vikas, I would like to ask you that how does the TCO perspective help you manage cash flows, and what are your best learnings from it that you would like to share with this room?
Sure. So I also come from the travel business. So we are running one of the world's largest travel distribution network. So we are dealing with travel agents across the world. Now, when we come from the TCO perspective and the cash flow perspective, a few years back, one of the decisions that we had to take was whether we would be running our own servers as a data center. That was the traditional way of running an internet portal, or whether we would be looking at cloud computing and other stuff. So at that stage, we had to compare not only the cost of running the data center plus the operating cost with the cloud computing cost, but we also had to ensure that in the first option, the cash is being used upfront. So that's the decision. We also included the cash as, because as Ashish mentioned, cash is king. In our business, actually cash, if you have cash in your bank, you can use that to generate more revenues, because in our business, when we are making payment to suppliers in advance, we are able to get much more commission. So it's actually delivering much more return than you can think of getting from any source of investments. So when we were comparing that options, the cloud computing was coming costly, but when we include the cash component, the opportunity cost of the cash, as well as the scalability function into this thing, cloud computing was the winner. And now we were able to actually scale up the business. If we were not having the cloud, we would not be able to scale the business, because we would not been able to add servers at that speed, while at the speed the business was growing. So I think when we are looking at the TCO concept, we need to look at the opportunity of cost of cash, as well as the scalability function as well, while determining which option to choose. Thank you.
Thank you, sir. Interesting point of view. On that note, I'll bring in Mr. Holani, and I would like to, discuss with you that looking at TCO from capital expenditure versus operational expenses in the context of changing world, what are the innovative and flexible payment structures that CFOs would be looking at?
See, TCO as a concept, I think is also going to evolve in future, right? And probably a time is not far when TCO will also get into the new things like sustainability or environment factors, which we are talking today. So earlier we used to only think of the overall cost, right? In 1 year, day one, what is your cost, or in 10 years, what is your cost? But sooner or later, the other aspects like sustainability or environment or the ESG reporting things which are coming, those will also get integrated into it. Now, again, another thing is which has changed. Earlier there were very few things which you can get on a opex model, right? So whatever is capex, it's capex. Today in our industry, which is infrastructure heavy capital equipments, one equipment itself costing few crore rupees, even those are now available on opex model. So you have companies, even we have started a new venture, so you can get a capital setup done and you pay over 10, 15, 20 years. So that's how the things are evolving. So you can get like data center setup, where earlier you used to spend millions of rupees on a UPS setup, right? Backend. Now you can get it as an OPEX. So you pay over a period of time, you don't have to worry. You have very minimal kind of lock-in period kind of things. You use it and you pay it, right? So the biggest thing is, for when you are going for a capex, you have to worry about the funding on day one, right? Then the issue of whether you fund it from your own sources, you go to bank, you go to market, or you have a say venture capital fund or some investment coming in, right? But when you are paying it over a long period of time, you have much more flexibility, right? You do your business, you generate funds from your normal operations, and then you keep paying for it as you pay for normal operational expenses. And that also provides flexibility in terms of escalating or de-escalating based on your evolving business model, because today the businesses are not that you start a model and it may remain same for 20 years, right? So in 5 years or 3 years, if you feel okay, you have to close down certain thing, you can change your model. So financing that way, when we go to a total cost of ownership or a OPEX model, it is going to be much more easier, or on a operational basis, then looking for a financing in the beginning when you have to run after banks or investors and searching for financing, and without that financing your business itself doesn't kick off. So that's what changes with this.
Right. All right.
One very key point which Brian mentioned is the cost of financing, and I think which plays a very important role when people like this, if you see if you're deciding. Sometimes what happens that we also have to see the cost of capital for us versus the cost of capital for the opposite party. Means if let's say if a big company is if a big company is financing it, then the cost of capital will be the same. But let's say as Times of India Group, the cost of capital for me may be much lower than if I am taking it routing it through an NBFC, and that plays an important role. And like Ashish also said, cash is king. Certainly, we means every organization wants to protect the cash. But what plays an important role, and that's where the fine role of CFO comes in, is to balance the cash preservation as at the same time looking at the cost of capital arbitrage that you have between the two
And
parties.
also important point, one thing which is going to affect your cost of capital or funding, once you have a positive ESG score or positive towards this, your financing cost is going to be lower.
Right.
Now already banks or funding institutions are talking of preferential rate of interest for someone who is into green earthing or ESG compliant.
Right.
So that's going to play a big role.
Yeah. At ETCFO, we say that, ESG is the new digitalization that's happening. So I think very valid point that, ESG is something that has to be factored in and
Yes.
will be, part of your strategy going forward. On that note, I'll come to Karishma. I want to ask you that why is the TCO approach significant for the CFOs in the hospitality industry? And what are the hidden costs in the operations which CFOs face problems identifying in their sector? And how do they overcome them? And what are your learnings, of course?
Sure. I think first I'd just like to thank you and the team at ETCFO for bringing us all together. I think it's fabulous to finally, meet people in person after a 2 year work from home and being, out of the physical community connect. So thank you.
Without mask.
That too without mask. So I'd like to just give a brief about the hospitality industry. So in 1920 in India, we did revenues of 1.82 lakh crores, and in 2021 with the pandemic, about 75% of that was completely wiped out. In fact, travel, hospitality, airlines, Ashish will bear with me out here, we were the industries that suffered the maximum, and we were pushed into a corner to go back and revisit the entire business model that we work with. So, typically in the hospitality industry, the fixed cost is very high, right? Your asset cost, your initial capex investments, whether it is rooms, F&B, etc. Your initial fixed cost is high, and your variable cost, your running cost, is low. And typically, when you are starting a new hotel, your break even comes, somewhere 5, 7, 10 years out, depending on the kind of top line one earns. So, with the pandemic, what we realized is that the way forward is cost optimization. And if we are able to, because obviously top line got wiped out, as I said, 75% top line just went. So it was all about focusing and reinventing ourselves. Actually, we are right now, I would say, in India, in worldwide, we are hospitality 2.0 right now after emerging from the pandemic. And we had to go back and question the fixed cost, because variable cost we know is something, it's linked to revenue, but fixed cost is, we went and questioned each and every line item. Where can we make fixed cost variable cost? I think that was the big game changer for all of the hospitality industry. So we've moved into certain models in which all the fixed cost line items, whether it is payroll, whether it is your AMCs, whether it is purchase, as Vikas was also saying, machinery, etc. How can we move to an OPEX model? How can we move to a variable linked to revenue model, a revenue share model, as opposed to paying upfront and sinking that cost in? So I think that's been the big game changer. And apart from that, I would just say that looking at technology has been a big game changer for us. So obviously, hospitality is a very people-centric industry. But with the pandemic, certain processes were made digital. So we at IHCL, for example, we introduced something called Tajness, which is next level of hygiene protocol, contactless check-in, so things like that. So people are becoming more comfortable. Less is more, if I may put it like that. They don't want so much of physical human contact at every stage. So we've kind of cut that back while the hospitality continues to remain warm, but it is not, it is keeping in mind the hygiene protocols, and that is something we've kind of maintained going forward. So I would say that's been the big game changer, the fixed cost, making that into variable cost.
Just
Thank-
to add
yeah.
to her, since the subject is so close to us, the important piece during the pandemic was that the hospitality industry, how leveraged they are. And the question of right proper debt equity is one thing is very, very important. So that leverage is very important. One, a company which into is hospitality, they are actually into different stages because they keep buying land, they construct, then there are settling assets, and of course there are cash profit and a book losses because when you capitalize the depreciation is high. The point I'm trying to make is that the proper debt equity mix one, the time and cost to build again is very, very important because there are five major costs of land is first construction cost, then followed by interest overhead and bit of a pre-opening cost. Your construction cost is very important, and when you build inefficiently, supposing you have to make a product of an abyss, say 40 lakhs a key, in that circle you have to touch a 4,000 ARR. Now if you build inefficiently in whichever market you are because of overruns and wrong leverage and over interest cost, you're never going to make money out of it. So the arbitrage is key when you actually identify a land, then how you build efficiently the hotel in the next 2 to 3 years, because operational profit you may get within a year, but 3 5 years later you will start making money. So you have to make that efficiency in built up cost right from day one. Your cost of construction is very important. Then there are a lot of volatility like crude, steel, cement, and labor services. There's so much, and that all gets added up. If you're delaying, then overhead cost. So that efficiently build, because other things, if you don't build efficiently, it won't get paid for, and then that's where the stress comes. So that's a very important point for cost and time to build for a industry like hospitality.
Sorry, I'll just add to that. So another model is, the sustainability model. So again, in our industry, when you're building a new property or you're renovating, there tends to be, this tendency to import. So as an alternative to that, to build up local suppliers, build up, local sources of materials, etc. So that is something, that is another way to kind of control the entire cost cycle, and also to look at more sustainable sources of energy, because that is again a very, very big cost in the hospitality industry.
Of course. Thank you so much. I'll move to Supriya here. Supriya, please tell us that, what is the biggest challenge that you have faced in estimating the total cost of ownership, and how did you deal with it?
Thank you so much. And yes, now it is quite established that the total cost of ownership concept is really important. I think in the pandemic, a lot of us saw how much important technology was. Earlier, I remember that we used to use AT&T, and nothing against that, but the calling and the way that we were communicating with each other was very different. We moved on to Teams, which was or Zoom, which was a better platform, and of course, people invested in that technology. So I think technology is not only important when you are there in extreme circumstances, but as CFOs, we all know that it is important for us to keep giving a better experience to the entire organization. And as Alka mentioned, cost optimization, that is also very important. And that can only happen if you are looking at your processes and you're trying to make it better. And in today's world, definitely digital evolution is already there. You have to change your systems. You have to change the way people look at data, because data is all around. So you have to actually see how you can make that meaningful, and how the businesses can use that. So data analytics comes into it. So at Boston Scientific, we invested heavily in technology. We are currently doing a S4 HANA, which is an upgrade of SAP. And we also invested in Ariba, which is the source to pay platform, which really helps us to get everything in one place centralized so that we can utilize that data to make more meaningful decisions. So how do you invest into all that technology? You really have to look at the total cost of ownership. And if I come to the challenges that we face, because these are not short-term projects, these are long-term projects. So there are a couple of challenges that you will face when you're gathering information about that and making those decisions. Like, definitely, one thing is there is a lot of uncertainty around how things change. What was it pre-pandemic, post-pandemic? So those are things you have to look at it, how technology is changing. And one thing I mentioned, data is not always internal, so you have to go to external parties to look at the data availability, vendors, look at the different models that are available, and and finally, definitely, you have to see what is your cash flow position. Do you have that kind of money? How you want to build that scenario around it? So these are some of the challenges that you always face when you take long-term decisions. How we dealt with it, I would say, is probably taking our best estimates. So that's the best we can do. If implementing S4 HANA is a 5 to 6 year or 7 year plan, how do you think it will change? Making the best estimates around it, and definitely proactively thinking about the risks as well. So, preempting what is the mitigation plan. I know nobody had thought about a war, but since it's there now, in the next couple of years, how are you going to deal with the supply chain costs? So lots of things that the organization is doing, and I'm sure most of the organizations, because of the increase in supply chain costs, we are looking at optimizing our cost, travel, headcount. So all these innovative solutions are coming into place. So I think these are the challenges, and how to deal with it, we all know. We just have to be, proactive. We have to keep thinking on how best we can mitigate these challenges. But definitely, cost of ownership is an important concept which we all need to take care of. Anybody who wants to add anything?
Yeah,
to
if
it?
I may add, I think all of us would have evaluated cloud at some point of time. And trust me, this is a real challenge in coming out with TCO comparison because things are not clear and module wise pricing is not clear. How the licensing will operate for the other licensing, it's a bit of a challenge. Ultimately, you rely on vendor to come out and give you some insight to do a TCO. So that's where I think the challenge of complexity is there. Other challenge could be factoring in softer aspect like ESG. Talked about ESG cost, that's okay, but what about carbon footprint? Right? So those kind of things are not coming into decision making right now. Then cost of opportunity lost. If you don't do this, what happens? That's again something which is can't be quantified very easy. In technology space where innovation is happening every day, uh, understand this. The traditional model of TCO is based on your past experience, and you try to replicate and say, extrapolating, saying how it will behave in future. But in new technology, that experience is not available. So you have to take a bet. So how you take your bet is will reflect into TCO models, etc. as well. And then ultimately the conviction where CFOs, etc., whosoever is putting money behind it, is convincing that okay, I'll back up this particular bet. It may play out, it may not play out.
And moving, from manual to technology itself is a big cost. Changing mindset of people that this is good, and the teething trouble in between itself plays a bigger role. So that's also a challenge.
Karun, I'll bring you in this conversation, and I want to ask you that you heard your peers here, and what how is TCO really about creating a holistic view of IT operational cost? If you can throw some light.
Yeah, no, thank you. And before I go that, I think it's great that I got the opportunity to go last because I get to hear all of the perspectives. I think I have been lucky enough to be on either side. Most of my last 3 4 years has been in the technology space. So not only have been selling TCOs to the customers and in being your positions because you are taking those decisions in my organization as well. Then if we need to be competitive in the market, I also need to look at my TCO models. So let me share a bit of both, right? So of course, being in the technology space in terms of what happened in the last 2 years, not only the opportunity came through for the companies who are in technology space, but there was a big element of responsibility as well, right? And this is something which is getting missed out. There was higher customer dependency on the technology tools and products. So that would mean that you as an organization has to be on your toes always. You have to be up and running. You have to be really competitive. You really have to understand each industry that you're operating at, because we heard the CFO challenges in each industry are different, right? So there is no paintbrush approach we used to have earlier where you sell licenses and move away. That is not going to work anymore. So how do you understand the nuances of each industry? How do you come up with the tailor-made solutions for each industry has been super important. So just on that side, I think I know somebody raised a point around the complexity of the TCO models. I think that's where I believe while TCO model is a great model, because you tend to look at the life cycle of the product and you tend to compare in terms of how multiple options are. But you also need to look at the allied non-financial factors, which becomes important for you to take a holistic decision, right? If I, as a company or as a CFO, is investing in certain products or technologies, while TCO is extremely important, there are multiple assumptions. You can look at the same TCO model for five TCO models by five different partners, and they will tell the different story, right? Because the assumption underneath could be different. While the direct cost could be easily allocated, but the indirect cost, I think it is anybody's guess. Your methodology could be different than mine. So I think while TCO is a good model, holistic model, but I think some of the factors which are aligned to TCO model, right, in terms of the agility that you could bring. I know he spoke about productivity, security. You may not always be able to attach value or financial metrics to these factors. So I think that is where, whether I am on this side where I'm taking decisions for my organization or where I'm having customer conversations, my recommendation always is to look at this model in entirety and then also look at what are the other areas that that we need to factor in. And now just coming back to the specific point that you made, I think TCO is all about stripping the elements of cost that we could have. I think people spoke about the direct cost. If I look at it in an IT parlance, a lot of conversation around capex versus opex, which were happening. I know people have invested in huge data centers, which has an element of server, network, power, electricity, and all of that into consideration. But I think the challenge comes in when you start to dissect the indirect cost down, right? When I look at the manpower who are running those data centers, now somebody would have an in-house manpower, somebody will have an outsourced manpower, right? So what is the per average productive rate that you will take for that into consideration? Now, companies have taken certain licenses on top of that. So what are the license costs that you will have to take into consideration when you evaluate the TCO model? Now, those licenses would need renewal at some point of time. Not every TCO model factors in that because everything has a shelf life. So are you really taking that escalation into consideration from a license standpoint in terms of how it is going to move? So I think the IT cost, if you break it down, it goes pretty deep, it goes pretty complex. So definitely need to invest in expertise in that area to create those models and then of course to understand those models. But I think, as I said, look at it holistically, look at it with other non-financial metrics. I think that will help us take better decisions as we go.
You've given us a slight peek on the checklist that.
Can I make a point?
Yes, sir. Yes, Puneet.
TCO. So TCO as a concept, it's means we have all been using it even on personal life. While we may call it something else. Let's say if I go to buy a TV or a fridge as well, we look at the star rating, and obviously the higher the star rating, higher the cost. But we know that it's going to be electricity saving, and you do that mental calculation. We look at warranty, a guy giving a 1 year warranty versus 3 year warranty. We say, okay, we will factor that in. That's essentially TCO, and that's what the same obviously at a larger scale we employ in organizations. And one of the key components which is now becoming, while it even today, maybe today it was not even 1%, which is the retiring cost of that asset, especially in the IT side of it. And that's, as we go along, is going to get significant, not just from a cost perspective, but from an overall, I would say, even from a brand perspective, even from how social concerned you are. And that's means today I don't think any of us has ever looked at when buying a laptop that how would I retire it after 5 years. But as we go along today, I know organizations where we say that you cannot just dispose of laptop, you have to call Chroma, they'll charge a what do you call recycling fee, and then take it. Now these costs are becoming significant, and I think that's one of the key component that's going to change how we calculate TCO.
Before we conclude our session, there are a lot of questions that we still want to discuss with you guys, but of course we don't have the luxury of time. So, what we'll do is that, to conclude, I'll just put forward a question, and maybe from Supriya we can start answering, and then it can go like this, and everybody can, give their concluding statement. So, the question that I want to put forward as a concluding note for this roundtable is that what is your own take on total cost of ownership perspective, and what lies in the future for CFOs having this approach? So, Supriya, let's start with you.
So certainly, as we've heard, we are now not CFOs, we are Chief Agility Officers. So yes, and I think that's a very important aspect. We are not here to just guide on financial data or how is it going to look at your profitability, but at the same time we have to enable the businesses to make decisions so that we can be sustainable in the long run. And very clearly, if you're not sustainable, like pandemic has taught us that you will not survive. So I think my take is that total cost of ownership is important. You have to look at all areas wherein it's going to touch you, and definitely make those informed decisions. The way forward is definitely technology. So being agile in terms of your digital space as well, not only having the data but making use of it, doing the analytics around it. So most of the finance organizations have a lot of data. They have budgets, they have actuals, but are they making those meaningful dashboards that go out to the businesses wherein you enable them to take the decisions? And lastly, I will say the sponsorship from the management. The culture is very important. So you have those that analytics, you have those benchmarks, you have all the information. But if you don't have sponsorship from your management to make those changes, and you have to enable that, then only we will be able to change further. So I think it's really important to have that culture within the organization as well.
Right, Mr. Mehta.
I think TCO is half story. It's not complete. It cannot be fully relied upon. Any vendor would not like to compete just on cost. They would like to create intangible benefits which cannot be measured, and that's where the business judgment come into picture. It's one of the small piece in the puzzle of decision making, but very small. And I think in last 2 3 years it has lost some of its relevance, because most of the spend that we have done in last 2 3 years is to keep the lights on, emergency purchases, and making sure that we survive the competition. So where is that TCO? I mean, where is the TCO is, I mean, cost plus the benefit. So where is those stories being played out? I don't see that. So the businesses are taking bold bets, and TCO is just a sort of part, hygiene check, whether you can afford it, whether you have cash, etc. Nothing more than that.
All right. Thank you so much for that view. Correct.
So I'd just like to say that TCO is a very holistic approach, and it is basically looking at things from a very long-term lens. So we actually have to start looking at things from that long-term lens. It is not just the immediate upfront cost of any investment, whether it is a hard capex investment, whether it is furniture, land, building, machinery, IT. Everyone's talking IT, but one has to look at what are the intangible benefits and costs associated with every investment, put that long term lens, and then take a very considered call while making that investment. And that's what I would call total cost optimization.
Thank you so much, Puneet.
See, again, yeah, means we do innovation so that the bottom line improves. Losing money can never be a successful innovation, and CFO plays a very important role. We are all very good in planning. We do some good job in execution, but where we most of the organization or things fall between the line is the reporting and taking corrective action. And I think TCO plays an important role. TCO again, it's not just an Excel exercise or a means cut off date that okay I've done it. It's a very continuous process. You have to keep looking for new variables, new parameters, keep improving your decision making and keep feeding into back into the decision making system. So TCO, I would not say is a one-time exercise which you do at the start of the project and get done with it, document it, and clear it. It is we have to evaluate. TCO is basically a tool to evaluate a decision. I would say whether it is even purchase, whether it is even opting on office. Not means everything has a impact, and TCO has to be means whatever mean the word may be used, but it is a very dynamic exercise which we have to do, and the CFO has to keep feeding the data. Where we falter is we start getting into interpretation before even putting the data first. I think that's where it comes. Put the data first and interpretation second, and that's where our roles become very critical.
So,
I think others have already covered a lot of aspects, but one thing which I feel is we are today not ready to, compute or give out a complete TCO, real TCO, right? Because one is the financial cost, which we all know, and we have been doing it for many years, maybe to lesser extent or larger extent. But when it comes to whether it's sustainability or environment aspects or even the employee retention and these things, which are new and evolving things, we need to come out with the ways and means how to compute and put a value to that, right? Because which I am sure most of the organizations won't be ready. So, like even for ESG today, mostly we are just started preparing, right? Or mostly the organizations are not ready. Similarly, for TCO, we'll have to put in place a structure. It can't be done on a simple Excel sheet. Thank you.
thank you, sir. Ashish.
Yes, so I just heard chief agility officer. I would add to that chief ownership officer because every employee has to take ownership. Chief ownership officer. So every employee in the organization has to have that ownership and go the extra mile, and you can then only you are actually reaching to the last mile to the customers. And the secondly, this TCO cannot be a boardroom discussion. It cannot be unilateral. You have to take all partners and stakeholders. They could be external vendors, they could be your financial institutions, they could be your customers. You have to actually collate the entire into one. I would say again the same realist model. You have to just keep on passing and make sure that it's end to end. The last thing I would say that the metrics has to be clearly identified. If you identify the clear metrics, and these metrics would keep on changing because we were of the landline days, and every year we see iPhone changing like the models of the fashion show. So we don't know how things evolve over the period of time. So what we need to see very clearly that how evolving you are. Those metrics has to be revisited. It can't be a standard formula of year one to year two and three, and in every aspect, whether it's the customers, whether it's employees or agencies. And in terms of technology, I have to see that at some point of time, government was lacking technology. But today, if you see the reason we are sitting in this room because of technology, the Aadhaar card, the vaccination, then the income tax, everybody has just filed the return. AIS is having everything. Which bank, what time you visited, what interest you earned, what shares you sold. So this is all technology. These were never heard 3 4 years back, right? So it is bringing ultimately it is bringing every customer, so many stakeholders, government, agencies, and people are using for various reasons. So I think it has to be end to end calibrated right from the first to the last mile and a clear communication because in a country like India having vaccinated 200 crores vaccination is technology. Somebody never thought of it, but when there was a necessity, that invention really evolved so quickly. And the base was Aadhaar, which we never thought about it. Thank you.
Vikas.
So, would like to just summarize while TCO concept brings in the cost related thing, be it the upfront cost plus the operating cost plus the personal cost of taking any decision when we are doing any decision. But I concur with his views that we have to move above from TCO. We have now to look at the total economic impact of the solution that we are looking at. So apart from the cost, we would have to look at the benefits, which could be intangible or other benefits that we are looking at from that solution, as well as risk and flexibility, and also most important is sustainability and scalability. So whatever investment we are doing have to be scalable so that we are able to grow, use that solutions for let's say another 5 7 years, if not earlier. Thank you.
Alka.
I also agree with him that the TCO approach is useful only when you take a holistic view of adding, all intangible benefits and costs, etc. And apart from that, it is important that the once you document while taking decision on any of the investment, you start working on that along with your team. That these are the areas wherein for all the processes you can either simplify, you can either eliminate, or you can either combine to create an efficiency in the system. So every time there is a continuous improvement happening in your organization. So that is something wherein I look at TCO approach as a very useful in that.
Thank you, Karan.
Yeah, no, I think like I said earlier, TCO has to be an enabler, not a limiting factor, right? I think we should not look at historical TCO model which has set elements of cost that really goes in, and we should be taking a decision. So TCOs has to reflect the realities of today. The business models have changed, they have moved on. There is a lot of disruption which has happened in terms of business models, technology, sustainability, productivity, retention, that all we have been talking about. None previous TCO model would ever capture the economic or financial benefits that we're going to have as a result. So my only 2 cents are that TCO has to reflect the realities of the future. We need to look at in line with what's changing in the business, what is more relevant today, and then it really has to factor in the overall package as we take those decisions to take our businesses forward.
It was really interesting discussion. I think I really had a lot of fun discussing it. I think it's especially delightful to see, all the CFOs, all the finance leader discussing their strategies, exchanging notes, and I think this is what ETCFO. This is what ETCFO has. This is why ETCFO has designed a roundtable like this. So thank you so much for your time, everyone, and thank you for coming today.